Good day, crypto trader. The price of Bitcoin, BTC, drops almost 1% in early morning trading as overall markets remain calm but are concerned about the US inflation figures that will be released later today. This could push the BTC price to $17,600. The risk at hand could be a surprise on the upside, like what happened with the job numbers last month, which would make a dollar that has always been strong even stronger. Bitcoin bulls could be stifled by a stronger dollar, forcing them out of their positions. Technical support is prepared to halt any sharp declines. Bitcoin price action takes a firm step back this week as bulls cannot trade away from the $19,000 mark. BTC price set to close the week with 10% losses. Lower highs and daily candle lows repeatedly breaking below $19,000 indicate a squeeze. After Friday's surprisingly strong job market data, there is a chance that the US inflation print will surprise to the upside, confirming the market's belief that the US economy is still overheating. With the S1 monthly pivot acting as a safety net for any falling knives and supporting the BTC price at $17,600, the risk of a further 8% decline to $18,000 exists. A bearish move is made even more evident by the fact that the relative strength index, RSI, is still above 40 and has a lot of room to fall, making it possible for it to move lower. As of June 18, the BTC price had already fallen to a multi-year low of $17,689. This suggests that a new monthly low may be on the way. On the other hand, traders will reduce their bets on additional rate hikes if the US inflation figures fall significantly, which would result in a sharp rise in the BTC price as the dollar weakens. The price of Bitcoin would still need to rise significantly to reverse the trend, but with the 55-day simple moving average acting as a stop, $20,000 could be on the line. On the back of stronger US inflation numbers, which clearly indicate that there is no end in sight for the Fed rate hike cycle, Ethereum, ETH, price is forecast to slide by 25% and flirt with a $1,000 barrier. Following the positive surprise in the labor market last week, traders now anticipate more and longer rate hikes in the future based on the inflation figures. This will result in a stronger dollar, which is bad news for cryptocurrencies. As they struggle to thrive in this macroeconomic environment, risk assets are being reduced, and as a result, they are poised to fall yet another leg lower. The Ethereum price action is comparable to that of the S&P 500, the Dow Jones Index, and US bond prices. ETH price is poised to approach the year low once more. They all suffer greatly as a result of the stronger dollar. The Fed will have to keep raising interest rates to control inflation based on today's figures, which will result in a stronger dollar. There is even talk that the Fed might raise rates by another 100 basis points. Under these conditions, if a perfect storm begins to form, the risk is that the price of ETH could fall even further than $1,100 and reach $1,000 very soon. The price of ETH may suggest that support can be found at the monthly S1 support level of $1,100. Additionally, the relative strength index, RSI, is getting closer to the oversold region, indicating a decrease in selling pressure. However, in situations like these, triggered by shifts in economic data, the price of ETH may still reach $1,100 or $1,000 by the end of the week, despite the fact that the RSI is trading strongly in the oversold region. Alternatively, in a more bullish perspective, a pop higher could occur once the dust settles after the inflation numbers and traders venture to take on some risk on positions. The pain trade is still far from over for cryptocurrency bulls, and a turnaround for this year appears impossible. That RSI close to the oversold area may provide additional motivation. Traders could anticipate a return to the red descending trend line and then a move toward $1,300 in such a scenario. Why it is not a bad idea for the price of Litecoin to drop by 13.52%. The price of Litecoin is currently testing levels below $50 after several weeks of routine consolidation. If sellers take advantage of a symmetrical triangle breakout, the coin could close the day around $46.64, as was discussed last week. The search for the bottom in the price of Litecoin continues. In the middle of September, Following the previous rejection from $67.50, the price of Litecoin settled above support at $50.00. Bulls regained lost ground quickly, but overhead pressure at $58 slowed them down. The chart depicts the tug of war between the bulls and bears as a symmetrical triangle pattern for the majority of October's first 2 weeks. A breakout from the triangle pattern, as discussed in the analysis from last week, predicted that the price of Litecoin would fall to $46.64. The anticipated Monday breakout was confirmed by a break below the lower trend line of the triangle, making bearish advances possible for the LTC price. The price of Litecoin changes hands at $48.88, down 7.02% from the point where the triangle broke out. The technical outlook for the price of Litecoin suggests that it will fall further to reach the 13.52% target set by the triangle's breakout point. However, a 12-hour to daily close above $50 would eliminate potential losses, bringing the total to $46.64. The pessimistic narrative gains credence thanks to the MACD, moving average convergence divergence, indicator. After the 12-day EMA, exponential moving average, a sell signal on Monday appeared to draw more sellers into the market. The price of Litecoin will have a tendency to fall to lower levels as long as the MACD remains below the mean line, MACD, and slopes downward. Insights from the Into the Block IMAP chart indicate that a rapid price recovery for Litecoin is still a pipe dream. As Litecoin price attempts to recover, the approximately 400,500 addresses that purchased LTC coins at $52.60 might consider selling at that level in an effort to make up for their losses and add supply, which would dampen the uptrend. Based on the IMAP investor cohorts at $53.97, $55.43, and $57.02, this battle between buyers and sellers will probably continue until $60. On the other hand, the IMAP model shows that the price of Litecoin does not have firm support to stop the current retracement, which suggests that it may continue to fall. However, despite all of this, the rise in the price of Litecoin to $46.64 may turn out to be a blessing in disguise for those who are still steadfastly bullish, because it may give buyers more time to accumulate liquidity before they move on to higher levels toward $100. Tezos, XTZ, price action rebounds strongly this morning ahead of the release of U.S. inflation numbers this afternoon because markets anticipate that they will be similar to the jobs data from last week. As a result, Tezos' weekly loss could double. In the event that that is the case, a surprise to the upside will cause the dollar to strengthen amid a flurry of risk-off sentiment regarding worries about a recession caused by inflation. As a result, Tezos' price action could plummet, doubling its losses. To make matters worse, the June lows are under pressure and the low of 2022 is at risk. Tezos' price action suffers a severe setback this week, with an already negative performance of 8%. XTZ price may reach New Year lows. As if that weren't bad enough, this afternoon's inflation numbers in the United States may complete the car crash, pushing XTZ prices even lower. Expect traders to adjust their positions in light of additional and longer Fed hikes, a stronger dollar, and consequently weaker cryptos that are priced in dollars if the inflation numbers turn out to be an upside surprise and do not show any sign of weakening again. In such a scenario, the price of XTZ would fall below the monthly S1 support level and seek support at the $1.19 June low. Bulls should expect to hold $1.15 and the monthly S2 to trigger a bounce, despite the high risk that that level will be breached from a sharp nosedive. However, as it will only serve to allow the relative strength index to cool down after trading in oversold, do not anticipate that bounce to hold any favorable cards. Naturally, the opposite is also conceivable. The markets would welcome a significant drop in inflation because economic data are very binary. For instance, U.S. inflation falling below 6% or less would indicate such a decline. Expect a similar reaction in the dollar, which would take a significant step back and offer XTZ price some upside toward $1.40 depending on the severity of the fall.